Good day, good students. Once again, I will be doing the question on Tiger Toffee, and the topic is still again accounting equation. Now, I want to first show you that I have provided once again for you the template as an answer sheet to respond to this question. And now I want to begin somewhere else before I do the accounting equation, more especially for those who don't have the accounting background, in terms of how do you know when something is an asset, or what are the examples of assets. So now, as I will be talking about assets, liabilities, incomes, and expense, I want you to be aware of the examples of assets that I will be talking about throughout the life of accounting. Now, this page on request, I can provide or make it available to you. You are given a list of assets, a list of liabilities, a list of incomes, and a list of expenses, and all the items that go to under owner's equity. They are specified in terms of classification of assets. Are they current assets or non-current assets, and together with their liabilities. So please be very familiar with this document in terms of knowing that bank is an asset, knowing that fixed deposit is an asset, interest income is owner's equity, creditors is liabilities. Vehicles is an asset, so that when you are perhaps constructing the accounting equation template, in the case where it might not be given to your institution, then you will need to be able to know what are the examples of assets, what are the examples of liabilities, what are the examples of owner's equity items, long-term loans. The list is very, very, very long. These are the examples of assets, liabilities, as you can see. If you don't need the document, please text me or write me a message on YouTube, or if you do have my email address or cell number, please do feel welcome to do so. I'll provide it to you freely. Now, it also, on the last two columns, specifies which side does an asset and income, a liability, and owner's equity item increases or decrease. They specify the bank with the favorable balance, increase on the debit side and decreases on the credit side. So very important to know that there is vehicles being an asset, increase on the debit side and on the credit side. Drawings, which is an equity, increase on the debit side and decreases on the credit side. Sales being equity and income, decreases on the debit side and increases on the credit side. So this is a very important template that perhaps one might need to have and in their disposal. So now this is, as I highlighted, very important. I also do have just another one that lists the examples of assets, list the examples of equity, and list the examples of liabilities. This one is not more advanced. They just give a list of all of them. What are the examples of equity items? But that one I prefer it because it's more detailed. Now let me begin to the question now that I am planning to do with you today, which is the Tiger Toffee question that I will be doing with you. Now it says, read through the information given here and then use it to complete the exercise below. Mr. Tiger Toffee repairs cell phones. Very important to understand what the business does. What are they doing? They are repairing cell phones, meaning whenever they repair cell phones, this becomes their service income. Remember, I'm saying service income because the repairing of cell phones, you are not selling a product, but you are rendering a service. And also the previous question I did on the accounting equation was a company that was rendering services through electrical services. It was an electrical company, or electricians who were providing their services. So now meaning whenever this company Tiger Toffee repairs a cell phone, that will be treated as increase in their income. So their main income is whenever they repair a cell phone. Now it says the following is an abbreviated statement of financial position for his business, which is Talking Toffee. So now Talking Toffee's statement of financial position as at the end of January in the year 2002. Now, or in the 31st of January in the year 2002. That was the end of the accounting period. The statement of financial position reflects your assets, liability, and owner's equity. And remember, your accounting equation is about assets, liabilities, and owner's equity. And all these are assets. And the heading clearly states that these are assets. Then assets is equal to liabilities. And there we do have our liabilities. And the owner's equity or capital amount, if you want to say so, it is the amount of 70,000 rands. So now nothing has changed once again, but in this case everything is provided. Remember, this will normally be calculated where we say total of the assets minus total of the liabilities. That is likely to give us the amount of the owner's equity. But everything is provided to us. All that we need now to do is to write the opening balances. Be mindful of the fact that this information is on the 31st of January in the year 2002, the end of the accounting period. And we are now provided with the information for the February 2002 period, beginning now in February, because the year is ending in January. And if the year ends in January, then on the 1st of February is the beginning of another year. One day after the end of the year is the first day of the next year. So now this becomes opening balances for February in the year 2002. Now let me copy all these balances: assets, liability, and equity. Under assets, I have vehicles of 70,000, inventory of 7,000, trade receivables of 5,000, and cash of 9,000 rands. 70,000, 7, 5, and 9. 70,000, 7, 5, and 9. So now I'm recording the opening balances: 70,000, 7,000, 5,000, and 9,000. And I'm just recording this on the heading that I already provided: 5,000 and 9,000. That was for cash in the bank. Then after I go and look for my liabilities, and under my liabilities I have a loan of 10,000, trade payables of 6,000, equity of 75,000. So it's 10, 6, and 75. Then after my explanation will be opening balance. Long-term loan 10,000, trade payable 6,000, then owner's equity 75,000. The explanation is opening balances. So now opening balances have been recorded. Therefore now let me go and look for the first transaction now. It says the following transactions were for the month of February. It's only the month of February. Then it says the owner, Mr. Tiger Toffee, increased his capital contribution from 75,000 to 95,000 by how much? That's the question. So now 75 to 95, meaning it will be a 20,000 contribution that he made. It increased to 95 from 75 by 20,000. So now we recorded the amount by which the capital was increased by. Take note, they say from 75,000, and if you look under your owner's equity, the opening balance was already 75,000 rands. So now is adding only 20,000 rands. Therefore now it will be the total at the end of the year of 95,000 rands. So we are not recording 95,000 rands, we are not recording 75,000 rands, but we are recording the amount that he contributed during the period. So now we say it will be increasing his capital contribution. So now the capital will have to increase by the amount of 20,000 rands. Then now this was in the form of cash, because it says he prepared a receipt number, meaning there was a cash contribution and receipt was produced by the amount that was deposited. Therefore now meaning our bank account is expected to increase, and we know that bank is an asset. So now, and even not knowing that bank is an asset, we can see there is bank and it's under the heading called asset. Therefore now we expect that our bank must increase by the amount of 20,000 rands, which is the capital that was contributed by the owner, and the capital that he contributed was 20,000. Therefore now the details of the description will be capital contribution that was contributed by the owner of this business. Please remember to write the plus when necessary. In this question, I will not be writing the plus signs, I will only be writing the minus signs, because I am using the mathematical approach that for every number there is an invisible positive number next to it by faith. Now it says bought parts to use in the repairing of cell phones for cash 1,197. Check number 54 was issued. The minute a check is issued, meaning cash must have been affected, because a check is cash. So now meaning money will go down, meaning our bank account will decrease, because money of 1,197 went out of the business. Why did the money go out? Is because we bought parts, meaning this will be increasing our inventory. In order for us to repair cell phones, we need some equipment, if I may say so, or some tools. Yes, I think the right term is tools. We need tools to be used in the process of repairing cell phones, or some of the parts that will be needed. So now we have this inventory, meaning these parts will be our inventory as an asset. Therefore now our inventory will also be increasing by 1,197 rands, because we do need these parts in order for us to repair the cell phones. Because if we don't have parts, people will come and want their cell phones to be repaired, and we don't have the parts to repair their cell phones, meaning the rendering part now of the business, which is the repairing of cell phones. And now let us check if where these two will be recorded. Money is going out. Therefore now our bank account, we expect it to decrease by an amount of 1,197. That is the amount by which our bank will decrease. Then we have to say, because our inventory will have to go up, therefore 1,197 will be recorded as plus 1,197. Then all other columns will not be affected. Our assets are increasing. Remember, these are assets. Our assets are increasing by, so our assets are decreasing by 1,197, and our assets at the same time here, which is inventory, are increasing by 1,197. The difference between the two becomes 0. Therefore, 0 assets is equal to 0 liabilities, and 0 owner's equity. Therefore, now our accounting equation will still balance also after this transaction. Then now let us go to the next transaction and we see what does it has for us. It says on the 5th day of the month, we repaired cell phones for voice.com for 969 on credit. Now it says repaired cell phones for voice.com for 969 on credit. Voice number 121 was issued. So now we repaired a cell phone. Remember, our main business is to repair cell phones. And whenever we repair a cell phone, that is an income to us, because we make income by repairing cell phone for our clients or our customers, but the repair was done on credit. Therefore, now whenever we do something to a person or a customer or a client, and after we have done something for a client, the customer or client doesn't pay us, therefore he becomes what you call a debtor. Debtor being the people who owe us money. Therefore, now it means our debtors will increase by an amount of 969, and our income will increase by the same amount of 969. Our income is going up, and the people who are owing us money, they also go up, because this customer has not paid us for the cell phone that we have repaired for him or her. So now for that reason, it means the 969 must be recorded now under our debtors, meaning our debtors are expected to go up by 969. And because this is income will increase the owner's equity. 969 will be affecting our owner's equity, and this will be repairs income. Repairs income. We are repairing cell phones or services rendered income, which is in the form of repairs. If you say repairs, it will not be enough to specify that is repairs income. Therefore, now that will be okay, because repairs can be an expense. Then after, now we go to the next transaction, and the next transaction is on the 6th day of the month. The 6th day of the month says that we bought stationery for cash. 57 rand is the amount. Check number 55 was issued. Now, whenever you buy stationery, you first need to go and look to your provided information or to your provided columns. Under assets, we see that there is no inventory of stationery. Take note of that. There is inventory. The inventory which is for the parts that we have, but we don't have the inventory of stationery. So now, because there is no inventory of stationery, therefore stationery must be treated as an expense at the point of purchase, or must be recorded as an expense at the point of acquisition. Therefore, now that means that stationery will immediately be treated as an expense. Now the stationery was 57 rand, but we need to know if was it cash or on credit. The stationery was bought for cash, the amount was 57. So now the minute is cash, meaning our bank account must be affected negatively, because money went out of the bank account, and this amount was 57 rands. Then now under details, there is a necessity, because stationery is an expense. Therefore, now the explanation will be stationery as an expense, or stationery expense, or even if you just say stationery, that will be indicating that it is an expense. Then we have recorded the stationery on the 6th day of this month. Then let us go to the next transaction. Let us go to the next transaction. Now we go to the next one, which is on the 11th day of the month, or no, on the 9th day of the month. It says we bought parts from communication center for cash. How much? 650. Check number 57 was issued. Again, now these are the parts that were bought. This is part of our stock, in other words, part of our inventory that we need to use it in the repairing of the cell phones. So now this becomes stock or inventory, in other words. So it will affect our inventory. And it was bought for cash, therefore now minus to our bank account. Therefore our bank will decrease by 650. Then at the same time, now we have to say increase our inventory or increase our stock. Therefore now when we increase our inventory or our stock, therefore now that will be a plus, because we have more stock available because of the parts that we bought from the communication center. Bought for cash, bank will decrease by 650 rands. and our inventory will increase by 650 rands, and all other columns will not be affected. Now we need to also continuously remind ourselves that this is cash and this is inventory. Don't forget, it's just a short abbreviation. So now when we record, don't forget to look at the heading, the main heading. Is it an asset? Yes. Or which of the asset? Vehicle, inventory, data, cash, loan, creditor, or owner's equity. So now before I record, I have that at the back of my mind at all times. Although most of the times I don't say it, but I have to know that, okay, I bought something. Is it cash or credit? If it's cash, then bank must be affected. And I know that bank is under my assets. Then after now, we go to the next entry, which is on the 11th day of the month. On the 11th day, it says we bought a second-hand motor vehicle. We bought a second-hand motor vehicle. Bought a second-hand motor vehicle for delivery purposes from Fast Cars on credit. 20,000 rands is the value. Mr. Toffee received invoice number 44, meaning it was bought on credit, therefore our liabilities will increase. It means it will be plus to our creditors or trade payables. Our creditors will increase because we did not pay them for this purchase. Then now our assets, which is vehicles, because we bought motor vehicle, therefore we expect our vehicles to increase because there's more motor vehicle available now in the business, and they're increasing by the value of 20,000 rands. So now let us check if where is our creditors. Our creditors are there under liabilities. There we do have creditors. Therefore, those creditors must increase by the amount of 20,000 rands because we did not pay for this motor vehicle. We bought it on credit. Therefore, now our motor vehicle must increase by the value of the asset that we just bought on credit, and the amount is 20,000 rands. So now we go to the next transaction, and the next transaction is a transaction on the 15th day of the month. And on this 15th day, they are telling us that we paid water and electricity for the month 228. Check number 57 was issued. We paid, and if we paid, money will go out, or money must go out of the business. So now we paid, therefore it will be a decrease to bank. And what do we pay? We pay water and electricity. It will be decreased to owner's equity, and I want you to be mindful of this. Decrease to owner's equity, and it is increased to water plus electricity. I want you to be aware of that. Remember, expenses, it decreases owner's equity. Although water and electricity in this case is increasing, but its effect under owner's equity is negative. So now we have that water and electricity, which is going up, but it is decreasing the owner's equity in terms of the accounting equation point of view regarding the effect. Now we say that water and electricity was paid, therefore our bank account will decrease by 228. Let me confirm if the amount is 228. Yes, 228. Therefore now bank will decrease by 228. Did I decrease my bank? Yes, correct. And my owner's equity will decrease by the same amount of 228 rands. The reason why owner's equity decreases because water plus electricity expense was paid. So water and electricity is an expense, and expenses decrease owner's equity. I explained this a little bit more in details in the previous question that I did. So also please do go and look on that, on the effect of the elements of the financial statements, specifically the income, expense, capital, and drawings to the owner's equity. Then we go to the next one. I might explain also that at the end. The next one is on the 18th. It says the owner, Mr. Tiger Toffee, took cash for business or from the business, and the amount that he took is 500, and he left a note on the till that he took money. I don't know what he is going to use the money for, but whenever the owner takes money for personal use, that is called drawings. Therefore, drawings are increasing. Remember, the increase in drawings decrease owner's equity. Owner's equity will decrease by the amount of 500. The details will be drawings. Then after now, bank will have to decrease because the owner took money outside of the business. So bank must decrease because cash was taken by the owner for his personal use. Then now, because of that, we have to record the 500 under our bank column. The cash column, we say minus 500. Then it took this, and we classify anything taken by the owner for personal use as drawings. Therefore, now under details, this will be drawings. Remember, drawings are increasing. Don't forget, drawings are increasing together with the expenses. But drawings and expense, they decrease owner's equity. Now, this will only be when we do correction of error. That might not be the case. But at an accounting equation point of view, your drawings and expense, they decrease owner's equity column. Now, let us go to the next entry. A bit easy questions. It says we received a check from a debtor. Remember, what is a debtor? A debtor is someone whom we rendered a service to previously, and that person did not pay us. So now, if we received something previously and the person did not pay us, that person is called a debtor or account receivables. And that is Temi Tsolekele to settle her outstanding account. She was the only credit customer of Talking Toffee on the 1st of February. Receipt number 20 was issued. There is no amount given. Why no amount given? Because they say she was the only credit customer of Talking Toffee on the 1st of February. Remember, 1st of February is the opening balance, meaning the amount that we had as accounts receivables of 5,000 was the amount owed by this customer. So he came to settle. To settle, you pay everything. So now meaning he paid all this 5,000. What a good customer. What a wonderful customer. And some customers, they run away these days. Now he came and he settled everything that he was owing. So now, and this will be indicated as increase in our bank account because he paid the full amount. So now this will be plus in our bank account. Because the customer is not owing us money anymore, we need to reduce the debtor's account by the amount that he paid. Because he paid, our bank will increase by 5,000 because he was owing us 5,000 and he paid all this 5,000. So his account must decrease by 5,000 while our bank is increasing by the amount of 5,000 that we have received. Let us look at this debtor's account where the debtor just next to the bank go down. Then the account of this customer must decrease by 5,000 rands and our bank account must be 5,000 rands increased because we received the 5,000 rands from this customer who settled his account from the opening balance of 5,000 and he was the only customer by then. Now, we have recorded this entry and we can go to the next one. Just take note that the headings are aligned. This is the debtors heading, and under our debtors heading we record as 3, the 5,000 as a minus, and under our cash or bank this is an amount of 5,000 positive. So take note of that, make sure that you record on the right columns. Now we go to the next, and the next one is on the 25th. And on the 25th, it says that we paid chat shop 500, the creditor. If we paid, money is going out minus bank, meaning our bank must decrease by the amount that we have paid the creditor, called trade payables in the statement of financial position. Include this as supplier, meaning the amount of our creditor that we see in the statement of financial position, referring now to this amount. The amount that we see as trade payables, meaning under creditors. Since I always say to my students, you must know that the word trade payables and creditors, or the name trade receivables or debtors, you must know that they will be used interchangeables or interchangeable. So they are saying that the 500 is included here, is inside the 6,000. So now we are paying something that was already there in our books. So now how much are we paying? We are only paying an amount of 500. Therefore, our bank account will decrease by 500. And our creditor or trade payables must decrease by the same amount of 500, because if we pay our creditors, we expect that they must decrease because we don't owe them, or we owe them less than where we used to owe them. So now this will be a minus from our bank account, from our cash. Then under the column of creditors, there the column of creditor, then we now need to acknowledge the fact that our liabilities must decrease by the same 500. Remember, owner's equity is not affected, therefore nothing to record under the owner's equity. Then we proceed on that same note of easy accounting equation. Then we say now, okay, the next one is close to the end, the 27th. In fact, the last transaction, but there are two entries there. Paid 1,000. How much was paid? We paid 1,000. So if 1,000 is paid, bank must decrease. We paid 1,000. So bank must decrease by the amount that we paid. That's it. Let me just do the shortcut approach now. We paid 1,000 to my bank to partly repay the loan from them. Oh, this was a repayment to my bank. Okay. And they say now, of this amount, 300 is interest expense. Remember, interest expense is an expense. So now they are telling us that 300 out of this 1,000 is an expense. And remember, expenses affect owner's equity. Expenses affect owner's equity. So now this will be interest expense. They're recording the 300. And now, what about the remainder? Where is the 700 going to? They say this was done by internet transfer. They don't tell us. What about the 700? Meaning now we say 1,000 minus 300, we get to 700. 700 is the amount that reduces the loan. This reduces loan. The interest does not affect your loan, it's just the cost of borrowing money. Therefore, now our loan will be reduced by the capital part of the premium or of the installment of 1,000 rand that we have paid. So 700 will be reducing the loan, 300 is the interest. Total amount that is paid is an amount of 1,000 rands. So now let us decrease our loan by the amount of 700 rands. Remember, there is our loan column. Therefore, now we will be decreasing that loan by the amount of 700 rands. So now let us check if does our accounting equation still balance. Bank is an asset, remember? This is a liability. This is owner's equity. Our bank is minus 1,000. Minus 1,000. Our liability minus 700. Our owner's equity minus 300. Remember, negative times by positive will give you negative. That's mathematics now. How do you convert signs? So now we have our assets as 1,000 and negative 1,000 owner's equity added to the liability. So now we have negative 1,000 is equal to negative 1,000. Still, our accounting equation balances. So now this will be how you deal with this transaction, and it's very important to also master such transactions where the payment or the premium or as the payment is divided into the interest part and the loan repayment or capital repayment portion. Now we go on the second 27th day. It says the cash services rendered for the month came to 1,710. Cash invoice number 7 was issued. So now we rendered services and money was received. So if we render service and we render them cash, the cash services rendered, then our bank is expected to increase by the amount we received from the customer after we have repaired the cell phone, because we are in the cell phone repairing industry. 1,710, we rendered this service to the customer and the customer paid us instantly. Therefore, now our bank will increase for the services that we have rendered because we received money for repairing of cell phones, and the amount for the month amounted to 1,710 cash on spot. Then now, because servicing rendered is our income, so now our income will increase, but I will write it as repairs income just to make sure that I'm consistent with the way I am writing my details. So now this will be income in the form of repairs income, because we are repairing here cell phones. Repairs income will increase on the credit side. Remember, incomes increase owner's equity. Bank must be increased because money was received. So now we need to come and say under our bank 1,710 and under owner's equity 1,710, and the explanation will be repairs income. It will be repairs income. Then we have recorded all that was needed to be recorded. Then I can record the totals. Under vehicles, we have 90,000. You can do the calculations at your time. 8,810.47, 969. Then we have 31,578. Then we have 25,500. We have 9,300 first. 9,300. We have 25,500. And the last one is 96,594. 96,594. So now these are the total of the assets, liabilities, and owner's equity at the end of this month. Let me just confirm the totals so that you compare the minus assets minus liabilities to get to the amount of the equity. 90,000 plus 8,847 plus 969 plus 31,578 plus 9,300 plus 25,500, 25,500, no, 9.3, and no longer assets. So these are my assets. The two are liabilities. Therefore, now my total assets are 131,394. That is from here up to here. Then my liabilities start here and they end here, only two of them. Minus 9,300 minus 25,500 it is a total of the same 96. Let me just confirm the total of the liabilities. 9,300 plus 25,500, it is 34,800. And if you say minus 131,394, it's exactly 96,594. So now always, as I highlight that, do the test for that entry, which is owner's equity. Yeah, guys, with that, I hope you have learned something. If you have any questions, any clarity, any extra resources you want from me, you want me to record a video on a specific topic, please do feel free to inquire. Then I will try as much as I can when I get time to record it for the sake of you passing. Thank you, guys.